Good day to everyone joining us from around the world, whether just waking up midway through your trading session or winding down through the night. Welcome. So on behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Aidan and I'll be guiding you through this exciting 2-hour journey as your host. So today's live stream is not just a presentation, but it's a conversation, and it's a window into the engine room of one of the most fast-growing, forward-thinking firms in the industry. And of course, I am not here alone. I am joined by two remarkable guests who help shape what WeMasterTrade represent today: skilled traders, mentors, and role models within our community. Let me first introduce the other composed, always insightful Helen. So welcome, Helen.
Thank you so much, Aidan. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offers. From how you start, how you grow, how you earn, and this is the kind of platform that doesn't just run trade, it's build trader.
So next to her is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. So please welcome Vincent.
Thank you, Aidan, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me the most about today is that we're going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you ever had questions or even doubt, today is the day to ask them.
And that's exactly what we're here for. Whether you're brand new to WeMasterTrade or you are already a part of our funded trader program, today's live stream is going to give you the full picture, not just a highlight reel. Over the course of this session, we're going to work you through what WeMasterTrade truly is, what we believe in, and how our programs are designed, and why we're doing things different from traditional brokers or platforms. So, I wanted to be clear here, this isn't just about sales, this is about understanding. So we want you to know what you're signing up for and what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we'll begin by sharpening the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that powerful feed flow, everything we offer, especially our trading packages, which we will discussing in detail. We will explain the logic behind each one, what kind of trader they design for, and how the structure changes depending on whether you choose the challenge model or instant funding model. So if you ever look at our packages and thought, which one is right for me? Today, we will answer that.
And more than that, we'll also do a live comparison between packages. We'll break down pricings, account size, maximum drawdowns, consistency, rules, and even payout side by side to help you make a fully informed decision. So it's one thing to see number on a website, but it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We will explain what the daily loss limit is, how it's calculated, why it includes both close and floating P&L loss, and how to avoid violating it, especially overnight. We'll go into the maximum total loss, the consistency ratio, and we even address common misunderstanding about trade sizing and risk per trade policies.
We won't just explain rule in isolation. We will explain them in the context of live trading decision. I will share some personal example of mistakes I made when I first started trading under funded conditions and how I judge this. Because rule doesn't mean to restrict you, they are there to protect the integrity of your role.
And while we are on the topic of helping you succeed, we're guiding you through our current promotion plan, including limited discount codes, trader support campaigns, bonus capital opportunities, and how to properly qualify and submit proof. So we've had some amazing responses to our promotions, but also some confusion. So we're showing you exactly what to do step by step.
From there, we transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to building long-term income at WeMasterTrade is through our profit sharing model. This is here's of what makes it different from raw firm. When you trade on a funded account and generate profit without breaking rule, we share that profit with you up to the 90%. But there's more to it than just percentage. We will explain the full payout circle, threshold, and timeline today.
Now, I know many of you watching today's aren't just traders, you're also educators, influencers of people with large networks. That's why we're also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanation of the two fair free rule and minimum funding condition.
This is especially important because we want all of our partners to feel confident and clear about their earnings. We've seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a service level live stream. We're diving into everything: packages, rules, promos, scale-up paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you succeed and make the most informed, empowered, and confident decision possible.
And we want to be interactive, not just informative. So if you have a question at any point, please drop in the chat. Our moderators are watching and we will answer as many questions live as we can. Your voice matters.
And if you are watching this on replay, don't worry. We will list timestamps and summaries below, and you can always reach out to our team with any follow-up inquiries. Our support team is incredible, and they really care about helping traders succeed.
So to wrap up this welcome, I'd like to say this. So WeMasterTrade is not just a platform, but it's a commitment to build real traders, to create fair structure and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you're ready to grow, to understand, and to take action, you're exactly where you need to be, and let's dive into the journey together. And let's begin. Once again, welcome to the WeMasterTrade live stream. Okay, thank you for once again for being with us today. So now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we've built this platform the way we have. Because when you're putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this segment, it's about origin, intentions, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and real outcomes for traders like you. So to work through that, I'm showing its own way. by two more people who live and breathe these principles. Helen and Vincent, let's start at the beginning.
Thanks, Aiden. To truly understand WeMasterTrade, we need to understand why its core creators. Unlike many platforms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give a capable trader access to capital, regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built and named on signal sharing, investment network, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label. It's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We give you the roadmap. You bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from the beginner to consistently funded professional.
So, that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibrations and multi-asset strategy design. So the WeMasterTrade Academy isn't just about theory, it's about implementation. We've designed the curriculum to match the real-world trading environment within WeMasterTrade, so what you learn you can apply directly to your funding account. And to ensure that our systems and content meet global standards, WeMasterTrade is proud to hold an ISO 2018 certification, which confirms that our educational products and trader development program meet rigorous trading criteria for quality, structures, and learning engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called firms come and go, WeMasterTrade has positioned itself with real operational stability, compliance framework, and internal accountability. We're not here for a season. We're here to help build career.
And we've seen that commitment translate into real stories. If you visit our testimonial page, you'll find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time traders. We have women re-enter the finance world after career breaks. And we have young professionals from underbanked region finally access the markets with a fund account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. So for those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share quickly insight, trading psychology breakdowns, market reactions, and platform updates. We believe that learning never ends and that we keep our traders informed. But let's also talk about culture. So what makes WeMasterTrade different isn't just the product, but it is often it's the community mindset. So we actively promote trader integrity, respect for competition, and knowledge sharing. So whether you're in a Telegram group, watching a YouTube series, or engaging with us on LiveStream support, you say they will actually listen.
And I'll speak honestly here. In many platforms, the trader is just a customer. As WeMasterTrade, the trader is the product. Your performance drives the business. Your voice shape the platform, and your consistency determine how far we can scale together. The motto accountability is rare and is something we're proud of.
And if you ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at your funded accounts, and connect with people who gone through the system. The stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. And we are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real scalable income opportunities for traders around the world, regardless of their starting point. So this is more than a platform, that is a trading and movement. And if you're ready to be a part of it, today's live stream will show you everything you need to know. So thank you, Helen and Vincent, for the deep and honest work through. So coming up next, we're going to take these foundations and connect it directly to our actual offering. Well, that means that we'll be discussing the different account packages available at WeMasterTrade, how they differ and who they're designed for, and what kind of results you can expect from each. So stay with us. It's about to get even more exciting. Welcome once again to the WeMasterTrade live stream. So now that we have explored who WeMasterTrade is and the principles that we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussions on our account packages. So this is where it all begins for most traders, choosing the structures that best align with their goals, their styles, and their current skill level. And when we say packages, we're not just talking about dollar figures, we're talking about frameworks. And each package of WeMasterTrade represents a different pathway toward growth, and today we'll walk you through all of them, what they offer, how they're structured, and more importantly, who they're designed for.
Exactly, Aiden. As WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct product lines for traders. The challenge package and the instant funding package. Each include a variety of account size and configuration, because we know that traders come with a different strength, risk appetite, and timeline.
Let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It's structured, fair, and become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a simulated account, and your goal is to meet specific profit targets while staying within state but reasonable risk parameter. There are 3 steps in total: phase 1, phase 2, and then the funding stage.
So take instance for our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track of record. So let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is 800, without breaking a 5% deadlock, which is 500, or a 10% overall loss limit, which is 1,000. I will have unlimited time to achieve this. That's a key difference from many brokers. We don't show you with the deadline.
Once you pass phase 1, you move to phase 2, where your profit target drops to 6%, that's $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
And finally, once both phases are clear, you enter the funding account, where you trade with the real capital, have no profit target, and your profit share jump up to 90%. That's one of the highest in the industry.
So this account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel of WeMasterTrade risk framework before scaling, This is the perfect package to begin with.
And now for those who are confident in their strategies and wanting to start with a largest account size, we offer 25,000, 50,000 and 100,000 challenge packages. These structures are similar to phases, the same 5% dailies and 10% total loss, but the profit targets scale proportionally.
For some assemble in the 50,000 challenge, and we need to hit the 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same 1 to 100, giving you room to adjust position sizing.
The 25K to 100K challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funded accounts. If you already pass all the above challenges or have a strong verified trading history, this is a good step up.
So every challenge packages come with a one-time fee. For example, just $45 for the 10K challenge. So this fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you're eligible for a 30% reset discount to stock bash. But what if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? And that's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stages, just pure live trading, backed by a structured, fair, and transparent system.
And what makes it even more accessible is that you can choose from several different account types depending on your story, preferences, and goals. Today we are going to walk you through each of the 5 main instant funding packages: the standard, 510, 510 euro, 510 novice, and customized. We'll compare the detail, but more importantly, we will have you figure out which package is right for you.
So let me set the scene quickly. All of our instant funding packages give you live trading access from day one. So that means no challenge phases, no evaluations. You pay once, follow the rules, and you're trading live capital. And every account, no matter the size, include no time limit, up to 90% profit share, balance-based drawdown, scale plan toward 1 million, support for EA, swing trades, scalping, and even HFT. So now let's go package by package. So as we go, Helen, Vincent, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you've seen succeed with each?
Okay, let's start with the standard package. I will describe this one as the best friend for the trader who just wants stability. You're getting up to 200,000 in capital with a very manageable 4% data loss limit and 6% overall drawdown.
It's like that calm, steady account that doesn't put you to overtrade, and with the profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And how about commissions?
Competitive across the board, forex at $4 per lot, gold at $4 per lot, index at $1, stock at just the 0.07 per lot.
And everything is allowed: new trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're someone who trades regularly, understand your strategies and wants a full range of assets and plans to play along the game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to trade with a target-based challenge. And if you ever had an account blown due to unrealistic rules, you'll find the standard model refreshingly fair.
I would also say it's a swing trader. The 4 or 6% risk profile gives just enough flexibility to hold multi-day position, especially with the weekend holding fully allowed.
Alright, so moving over gear, let's talk about the 5-10-10 package. Same capital ceiling up to 200,000, where you get 5% daily loss and a wider 10% overall limit. So why does this matter?
That extra cushion is massive for traders who scale into positions or take multiple entries per setup. You got more room to breathe, especially in high volatility market.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still have full support for scalping, EA's new trading. It's very trader friendly.
So who this is bucket for? This is best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you ever got a tested intraday strategy and just need some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit target, the clear milestone motivates some people, especially if they're payout oriented.
So now here's a personal favorite. The 5% zero, so you get 5% daily, 10% overall, but no profit target, not zero.
And that's a blessing for high precision trader. You are no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter a 3-5 trader a week, this is just pay. You're not penalized for patient, you're actually rewarded for it.
And who is for veteran swing trader, risk-conscious trader, people who prioritize consistency over speed. If that you will try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This is their home.
And now for the rule breakers, or rather those who don't want to be evaluated and how even their profits are, the 5-10-10 no PC removes perfect consistency tracking, right?
Exactly. Same 5-10 risk roll 5, but you're not required to keep your profit grow smooth. One big winning days is totally fine.
That's a trading copier are not allowed in this one. So it's a minor trade only, and you need to trade responsibly. But for a reserve trader who sometimes has big spike, this is the play.
So who is for? It's perfect for high risk reward traders or anyone who's had issue with consistency rule at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized package. So this is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust your daily loss, overall loss to your liking. Plus, you can fund up to the 400,000 more than any other account.
It's premium, flexible, and comes with all trading style allowed, including EAs, news trading, weekend holding, HFT, and more. So who is for? It's for top tier professionals, hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind. This package lets you build it.
And I always say, if you try out a model and nothing quite fit, build your own blueprint with the customize. That freedom is rare.
So to sum up, every instant funding package we offer comes with a clear risk parameters, flat commission, deep market access, and real profit potential. There are no limits and payout starts as early as 1 day in.
And no matter your strategy, scalping, swing, auto, or manuals, there are an account that's aligned with you. The key is picking the right one now, so you can start building consistency from the start.
And if you're ever unsure, our team is available 24/7 to guide you. But the real secret? Pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
So up next, we'll walk you through exactly how to protect your account, avoid breaches and understand the key risks and consistency rules that power our entire platform. So stay tuned, this is WeMasterTrade, where real capital meets real strategy.
We copy trade.
Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is come down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think that they understand, until it kicks them out of the account at 3:17 p.m. on a random Tuesday.
Here the good news. When you understand how it really works, it's become one of your battle, your risk control. So today let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur. It's both floating and close trades on any single day. If your equity fall below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
So let's work through a live example. Just imagine at the start of day 5, your balance is 10500. Your equity, however, is higher at 107,000 because of open closing profit.
And if you're on a 4% daily loss limit, we calculated over the higher number of $107,000.
So 4% of 107,000 is 4,000. That means your equity for the rest of the day can drop below 105,000, or boom, the account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating lots and you haven't closed it yet, if your equity dipped below the threshold for even a second, well, that's it.
Now let's reverse it. Say it's the start of day 7. Your balance is 1,100, but your equity is 99,000 because your open trades are slightly in loss.
Since balance is higher, we made the 4% on initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
And what happens if you break it? The system will send a market order to close all trades. Everything liquidated, your account is disabled, and you can trade again unless you purchase a new package.
And here the kicker, the outage will happen when the system detects the threshold was crossed. But due to the market fluctuation, your final profits and loss might look worse than the actual threshold. That's because the system executes a closer based on price delivery at the time of liquidation.
So even if you only intended to take a 3,900 loss, once slippage writes in your goal or NASDAQ into at least 4,200, that's why we don't say, don't mind the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the raw mindset kicks in.
First tip, know your buffer. Never plan trades to take right up to the edge of your limits. Leave at least 10 to 50% room below the max loss, especially in volatile markets.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stay at their balance all day. But if your floating loss is dragging your equity, you're heading toward a violation.
So tip 3, use a dashboard or a tracker. So inside WeMasterTrade, we provide with dashboard that show your live draw shares. Use them, check them, don't rely on your memory.
And also, poor trading after the big loss early in the day. If you lost 20% in the first hour of learning session, maybe it's time to stop and reflect, and not try to rerun trade your way back up.
Another big one, trade smaller during news hour. If you are trading gold during NFP with full loss side, you're practically betting to break the daily loss rule. cut position size, and ride box volatility.
So, what about the top breaking mistakes when it comes to daily loss?
And the number one is over leveraging. Trader open position as at 5, 6, 7% of their account, thinking they will close quickly. But if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 bip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that quick trades are all that matter, they're not. Remember, equities include both floating and closed positions, so the total equity line is your score.
And I always say this to new trader, the daily loss rule isn't or your enemy. If your account at back, it decides to protect you from doing something irreversible.
Exactly. It forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you'll last longer than 90% of the market.
And one last note, it isn't just about rules, it's about trust. And WeMasterTrade funds you because we trust that you will manage risk responsibly. The daily loss is there to protect that trust on both sides. And as we have covered the daily loss rule, and if you haven't already clicked that one, you're missing out. Now we're moving on from the daily boundary to the absolute boundary. So I'm talking about the maximum loss rule, also known as your account stop loss. So the line that can't be crossed, not just for the day, but for the entire life of your trading account.
And this is where a lot of traders misunderstand how to work. They think, well, I didn't hit my daily loss limit, so I'm fine. But then a week later, they choose away their account and suddenly liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seat belt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is a max loss rule? So let's define it simply. It's the total maximum amount you're allowed to lose across all trades for the entire account. If your equity, that is your real-time capital, including option trades, ever drops below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss, we reset every day. This one doesn't reset, it's cumulative. You can lose 2% one day, 3% next day, and if your total loss crosses the line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance. Not your equity, not your profit, but the original number you started with.
So let's work through a concrete example. So suppose you have an instant funding account with an initial balance of 50,000 and your max loss limit is 6%, which is 300.
That means your equity can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday, the total loss from your highest point back down to the threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you lost 3,000 in closed trade and you have another 1,200 floating in red, your equity is now at 46,800. That's the below the limit account close.
And just to be clear, it's not about the net gain or the loss of cost trade, it's about where your equity stands in real time relative to that stop loss floor.
And here's where it gets interesting and get a little tricky. Let's say your account will show the 51,000. Correct, you're in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fall before you hit it.
Exactly, then you have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000, so your profit gives you cushion, but the floor never moves.
And what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And second, like with the daily loss, if their volatility was decreased, your account might close out below that line. That's just equation reality.
So most importantly, once it breaches that account is permanently disabled, so you need to purchase a new package if you want to continue trading, no reset, no rollbacks.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
And first, track your total grow losses every day. You should always know how close you are to max loss for. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profits as protection, not permission. Don't treat floating profits as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating order aggressively. Even if you're positive overall, a single trade with full stop placement can take you from safety to shutdown in a few minutes.
And four, stay cool when you're slow. If you're down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entry.
The biggest mistake? Underestimating floating drawdown. Traders close 3 losses and think, okay, I still got room. But they forget about the 4 trade floating minus 1,800.
Second, traders who trades recover after a bad day. They lose 4% in one day. Come back swinging the next day, thinking they will make it back, and instead take another 2% and boom, violation.
And third, this one hurts ignoring state page during major news. With a startup, newcomers can gut you straight through your limit.
The master rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal and institutional, as a non-negotiable boundaries.
Right. It's a reality check. If you're consistently brushing up against your math loss, the problem isn't the rule. The problem is your system or your psychology.
So at WeMasterTrade, we're not just giving capital, we're teaching structure, and the math loss rule is more separate guidance from professional. So remember, your max loss is a percentage of your starting balance, typically 6 or 10%. It's calculated using equity, not balance, and it includes both close and floating losses, and once reached, your account is gone. So coming up next, we'll explore the consistency rule and why steady profit matters more than big spike when it comes to growing, scaling, and getting paid.
If you ever made 5,000 in one day, then made 200 the next 4 days, and wonder why your payout got flat, this next section is for you.
Let's dive into the rhythm of profit probability and how to stay consistent under the WeMasterTrade model.
So stay with us. This is the WeMasterTrade LiveStream where structure meets opportunity. So now that we have talked about the daily loss limit, we've just also covered the maximum loss rule, 2 pillars of protecting your capital. But now it's time to shift gears just a little and talk about not risk, but about results. So here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and can actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
And this rule right here, the profit consistency rule, it was separate a lucky spot from reliable trader. It's not whether you can make money over time or if you just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you fund it and you're wondering why your payout didn't go through, this rule could be the reason.
So let's define clearly. The profit consistency ratio is a measure of how even your profits are from day to day. So the more balanced your profit, the lower your ratio. So less consistent, meaning you have one giant profit day and then smaller losing day, the higher the ratio.
The idea is simple. If 80% of your total profit comes from one day, that's not consistency, that's luck or rage. What we want to see is a trader who makes a profit day after day, even if it's more. That's what we can scout.
And how is it calculated? The formula is really straightforward. Take your best trading day profit and divide it by your overall profit since you started the account. Then multiply by 100.
So the best day divided by total profit multiply 100 equal your profit consistency percentage.
And just to be clear, best day refers to your highest global profit in a single calendar day, and total profit is the sum of all your global profit minus any global losses or open losses across the line of the account.
Let's go to the example. Let's say you have the following result over 5 trading days. Day 1, you got plus 100. Day 2, you got plus 200. Day 3, you got minus 50. Day 4, you got plus 100. And day 5, you got plus 60.
And that means your total net profit after 5 days is 100 plus 200 minus 50 plus 100 plus 60 equal to 410.
So your best day was day 2, that's $200 in profit.
So now we apply the formula. $200 divided by 410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.978%.
And now let's say your account requires 20% profit consistency, which is common. This a trader is way above that, so they couldn't qualify for the payout that.
So even if this trader is profitable, they're not consistent enough. So they have one giant day that made up almost half of the total profit. That's not sustainable, and that's what we're looking at here.
And this is where I will want to speak to trader. If you're relying on 1 or 2 weekdays to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get futures, and who get trusted with more capital.
Alright, so let's address the number. What is acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit. Don't panic, you're not disqualified. You just need to keep trading and even out the curve.
And here how to do that. Trade smaller size for a few days, take smaller control win after for 200, 300 days. Avoid this swing trade, that's good why your ratio again. Spread profit across multiple days, not one month setup.
And for those who are using EAs to monitor your equity cost, if your EA is growing profitably until one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
And here's the common mistake to avoid. Mistake 1, trader hitting target early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
And mistake number 2, overtrading after the big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
So mistake 3, thinking this rule is just a huddle. No, it's not. It's a reflection of what we're actually looking in for our master traders.
And why did rule matter? At the end of the day, this isn't about controlling you, it's about the building habit you can handle scale. If you can't be consistent with the 25,000, what happens when we review 100,000 or more?
Exactly. Consistency is what makes you safe to investing. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you're serious about long-term trading.
And we've seen it time again. The traders who respect this rule, they're the one who get multiple payouts, referrals, and grow into six-figure funding accounts.
So don't fear the rule. Understand it. Use it as your feedback tool. If your ratio is too high, great. That means you got profit. Now keep going. Balance this out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculated your profit consistency ratio automatically, and you can check it anytime under your status tab.
So to recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions and monitor your progress in the dashboard. We'll talk about the limit for the maximum loss and examine how your profit consistency shape your long-term payout and growth. And now we have arrived at the final and perhaps the most overlooked rule of all is the risk consistency rule, or what we call the discipline test.
That's right, traders often think the biggest enemy is the market, but truthfully, it's inconsistent, especially in how much you're risking from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you're managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
So let's break it down as a core. The risk consistency rule is simple. You're not allowed to risk more than 2% of your initial account balance on a single trade idea.
And that includes all losses associated with that trade idea, both low losses and floating losses. Even fees, commissions, and swap are covered.
And for some accounts, like the 51010 no BC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
So because consistency isn't just about the outcome, it's about the progress. The more erratic your position sizing is, the more volatile your equity cup becomes, and that makes you hard to scale.
This will protect both you and the firm. It helps reserve capital, prevent large equity swing, and make sure your assets play out over time.
Think of it as your account's heartbeat. If your position size goes up and down, 0.5 lot one day, 5 lot the next, the system flags. That's not structure, that's chaos.
So this is where it gets technical, but stay with us. So the term trade idea isn't just one order, it's a group of trades that share the same logic.
If you run 3 buy positions on goals at different times and you flow them within 3 minutes of each other, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they're seen as a single, unified position from a risk perspective.
So the system doesn't look at your trades in isolation, it's grouped them into logical bundle and apply the 2% rule across the entire bundle.
And once allowed, you can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP, GBY, and short on AUD, USD, and each position has its own distinct direction and asset, those are 3 separate trade ideas, and each one can risk up to 2%.
So let's say you go on buy gold and then you go buy again and again. Now you have 3 open positions in the same direction on the same asset.
Yep, the system treats that as one trade idea. So if the combined floating risk or eventual loss from those positions exceeds 2% of your starting balance, boom, you've broken the rule.
And another mistake, opening multiple goes by, then slow one 10 minutes later, then two other together. The system will trade flow within 3 minutes of each other, so be mindful of your close timing.
So let's go hands-on. Suppose you have 100,000 account. The 2% max risk per trade idea means you can't lose more than 2,000 on a single trade idea total.
And so you open to go buy one large egg. You don't play a stop loss. New heads, the market drop 100 pips. It's a lot losses 1,000, that's 2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken, account flash or liquidated depending on enforcement model.
And on some account, especially instant funding account with stricter risk tolerance, the breach may result in not to fund its account status or immediate closure.
Tip 1. Set your lot size based on account risk, not emotion. Know how many pips equal 2%.
Tip 2. Use stop loss order religiously. Set them based on the risk per trade idea, not random chart level.
Tip 3. Don't start trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into the multiple in trade, do it smart. Scaling smaller, you might work less if needed. Keep the total exposure below 2%.
And here's the common violations. The most common reason traders break this rule: stacking multiple entries on one trade idea, thinking it's still separate.
The second, open high risk trade after win, assuming they playing with their house money. Spoiler, the market doesn't care.
So third, neglecting floating drawdown. So a trade may not be closed, but floating that still counts over the 2% risk.
And why we enforce this rule. This isn't just policy, this is a professional practice. Hedge fund followed it, bank followed it, real trader followed it.
Exactly. We're not here to micromanage you. We're here to protect your accounts, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small consistent risk is the foundations of scalable capital, those are the ones who grow. There are the traders who go from 25,000 to $1 million account.
And if you want to be a professional trader, you have to think like one. And professional trader always know how much they're risking on every trade every day.
And if you're still raising your lot size or opening trades because the setup feels right, take this as your sign. Step it up, get structure.
So this is more than just a rule, it's a habit. Build it now and the path to bigger capital and larger payout becomes way more predictable. And that, my friend, wraps up the 4 essential rules of trading at WeMasterTrade that include daily loss, maximum loss, profit consistency, and risk consistency. Master these, and you're not just staying compliant, you're building a foundation for serious capital management, long-term payout, and scaling. So next up, we are going to enter the economic analysis of today's news calendar.
Okay, wait a second. We begin today with two events: the German Info Business Climate, as speak by BOE Governor Andrew Bailey. Starting with the German Info, the figure comes at the 88.1, which is slightly above the forecast, 87.5, and the previous readings 87.5. To mark is a mild improvement in business sentiment with Germany, the Eurozone economic index.
Right. Although 88.1 is still relatively weak historically, any upward surprise is a positive signal. It suggests that the German firm may be seeing signs of stabilization after months of stagnation. This could lend temporary support to the euro, particularly if traders start to pricing less urgency for rate cuts from the ECB.
Meanwhile, Governor Valley first speak is also worth watching. The UK is at a critical juncture. Inflation is falling, but work growth remains sticky. Depending on how it and Dover's history, we could see GDP volatility, especially the GBP, USD, and EUR GBP.
For the 7:30 p.m. CAD CBI data doom, this is where the real market moving action begins. Canada released 4 key CBI metrics in one go, each one painting in different layer of the inflation picture. Here's how it came out. CBI M per M 0.5% versus 1.5% reverse. Median CBI Y per Y 3% versus 3.2%. Trim CBI Y per Y 3% versus 3.1%. Common CBI Y per Y 3.4% versus 3.5%.
And the most headline-grabbing figure here to the CPI jumping to 0.5% from the negative reading last month. That a sharp rebound and many right concern that's why Russia are not easy as smoothly as expected. Although a year-over-year figure are slowly ticking down, they remain above the BOC 2% target.
This boosts the Bank of Canada in tight spot. They already began cutting rates in June, but if inflation doesn't cool up consistently, they may be forced to pause or slow the rate cutting cycle. Expect heightening volatility in USD CAD, especially if traders reassess the dovish outlook for the BOC.
And don't forget what the CAD KPY too. If BOC pulls back right while the BOC maintains untracked business, the growth could break down.
For the 8 p.m., ECB President Lagarde speak. Now all eyes turn to ECB President Christine Lagarde. Today's IFO reading says the stage for her comments. The ECB is juggling a weak Eurozone economy and lingering inflation, especially in the services sector.
Exactly, if Lagarde acknowledge economic weakness and learn of it, the EU could slide, especially against USD. But if she highlight inflation bridge and definitely the pair of future rate cuts, EU USD might stabilize or even bounce.
It's also a good idea to look at EUR GBP, especially with Bailey also speaking today. Central bank divergence between the ECB and BOE could feel interesting setup.
The next event at the 9 p.m. GDP and USD major events closure. The day wraps up with a very high impact closure. First, Bailey speak again, possibly offering further clarify on the BOE policy outlook. Then we have a two critical U.S. events. Fed Chair Jerome Powell testify. Semi-consumer confidence 99.4 versus 99 forecast and 98 previous.
The consumer confidence number beats expectations, showing continued strength in U.S. consumer sentiments. That's a bullish sign for the U.S. economy and reinforces the Fed's caution in cutting rates too soon.
But the biggest driver here is Powell technically. The market will hang on everywhere, especially around inflation, labor market strength, and the Fed rate path for the second half of 2025.
If Powell leans hawkish, the USD could strengthen significantly, especially against the currencies like GBY and EUR. Even if he's neutral, any comment about persistent inflation risk could trigger a rise in US yield and dollar rally.
And don't overlook the Richmond Manufacturing Index. Core is came at -10 versus previous -9, suggesting Brazilian weakness in regional manufacturing. Still, unless Powell endorses the likely one will heavily on the dollar. And for the key takeaway, for the EUR could again slightly from the updated German info, but the laggard tone will determine follow through. For the GPP, the risk of volatility from Bali back to the best picture. For the CAD inflation data is the most actionable what for possible Howard BOC repricing. For the USD stand for to again more, it will maintain a Howard stand alongside solid data.
So focus on 7:30 p.m. to 9 p.m. for maximum volatility windows. That's when CAD, USD, and GBP are all in play. Traders should be ready for whipsaw, especially in USD CAD, EUR USD, GBP USD, and cross pairs like CAD GBY or EUR GBP.
So thank you all to audience for joining us today, and we hope this session has been informative, that you're as excited about the opportunity at WeMasterTrade as we are. So remember to like, subscribe, and share the live stream with others who might benefit from it. And don't forget to follow us on our social platforms for more updates, promotions, and trading tips. Stay tuned for our upcoming events, and we look forward to seeing you again soon. Until next time, happy trading!